The egg has been scrambled. And spies bouncing. That was a pretty nasty dip, wasn't it? Yeah, 598. Wow. Sheesh. And then obviously we're approaching 600 again. So we're back. We're back. We are back. So the Fed minutes come out in 5 minutes. See how the market reacts to that. Nothing else really moving for now, right? Everything just, for the most part, seems to be waiting for the Fed minutes. 3% chance of a Fed rate cut? Yeah, probably. Maybe less than that, Andy. Maybe less than that. uh, yeah, less than that. Ayo, Gary. Gary's here for the chaos. Here for the chaos. Here for the chaos. Don't forget to smash a like, guys. Share the link, all the other fun things. You know what's interesting? Actually, the stream is you know what's interesting is we have way more people watching on Twitter than we do on YouTube's. Way more. I think people on YouTube are more so interested in the momentum stocks, and then Twitter is more so interested in X is interested in the larger stuff. So yeah, those Fed minutes come out in 4 minutes, 3 minutes, and then Powell is speaking at 2:30 Eastern time. Alrighty. The expectation is that the Feds will keep the rates, the same. But that doesn't really matter though, because all of that is priced in. It's more so to do with outlook, right? Like, when do you guys think you're going to cut rates? Are you going to cut rates at some point? And what do you need to see to cut those rates, right? 4-foot NQ violence, then long or short, spy puts, spy calls, zero DTE, all in, both ways. Ah, yeah. No, I'm gonna sit on the outside and just watch. I'm gonna sit on the outside and just watch. Do you have an American flag in my Amazon cart? Why? Why do I need that? Funny. Hey guys, Pyro, hello, Ian. How are you, Ian? Yeah, yeah. Coin is running because of the stable coin. Yeah. So a Circle, right? CRCL. Both of these stocks have been on fire. Coinbase and Circle, right? I'm gonna pull up Coin here really quickly. Yeah, 290, 14% rally today. Pretty nice. If you're holding some Coney dividend shares, I'm sure you're excited about that. Did you go cook the egg? Yeah, the egg was cooked and scrambled and fried. All of the above, Tony. For when Canada becomes the new America. Yeah, Powell to resign before rate cuts. Honestly, at this point, I wouldn't be surprised. Yeah, it looks like we just failed before 600 here. Again, so we have about another minute to go, guys. Don't forget to smash a like if you haven't already. Give me a review on Coney ETF. Hassan, we can after the minutes come out, after the statement comes out. Coney James, Coney, yeah, Coney is gonna be smiling. Smash a like, hit that subscribe if you haven't already, please. I'm gonna pull up CNBC, right? So this is usually the site we use for the headline. So we're gonna see the markets react before we come back and look at what the Fed has actually done. So um, let's see. I'm just pulling up my news sites here. Here comes the chaos. Here comes the chaos. Here comes the chaos. Uh-oh, spies pumping. Oh, Oh, are we going to go up or down? We're stuck at 600 here. Oh, okay. Come on. You can do it. Give us 601. It's a nice little pop there initially. Yeah, so the Feds have left the rates unchanged, right? Surprise, not really, right? That's not the key to the puzzle, though. The Feds have left the rates unchanged. Okay, this is just the initial reaction here. So, um, so the Federal Reserve leaves key overnight interest rates unchanged in 4.25. La 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 la. The rest of it is rubbish, right? So nothing's really changed. Don't think we're really surprised about this. Yeah. So just be careful. Right? The markets will really pick a direction though when he's on and speaking. That's what we really care about, right? We knew, we expected this. Um, we're more so just waiting for him to come on and speak. Yeah, rates are the same. Nothing new, right? As expected. So Fed leaves rates unchanged as expected, right? Yeah, I see that. Yeah, something about slower growth. Um, I feel like that was put in there on purpose. So the Fed projects slower 2025 growth, higher inflation, sees a 50 basis points cut in 2025, 25 basis point cut in 2026 and 2027. Interesting. Yeah, I feel like that's an excuse. That's a reason to not cut the rates. But they're calling for a 50 basis points cut in 2025. That's what they're saying, right? When? Who knows? Right. So again, the Fed projects slower 2025 growth, high inflation, sees a 50 basis points cut in 2025. Interesting. Interesting. Yeah, the markets are selling off now. Right? Pump and then dip. Yep. Gold is going up. The price of gold is going up. Yeah, we're back to 599. Yep, exactly, Kim. Well, yeah, I think that's why we had that initial reaction, right? So we're looking for that 50 basis point cut in 2025. Yeah, there's a long statement there. I don't really care for the statement because he's going to come in and read that same statement again. Although swings in net exports have affected the data, recent indicators suggest no, 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 no. Unemployment rate remains low, and the labor market conditions remain solid. Inflation remains somewhat elevated. Maximum employment. Yeah, this is just the same rubbish he comes on and reads. I really don't want to read that. There's nothing there. What's with the yellow line at the top where the price got rejected? Oh, that's an SD. That's an SD band. Like one of those Bollinger bands. Yeah. You can turn it on with the algo. Let me know if you want to know how. Yeah. I don't think we really decided in which direction we want to go in yet. Gary, probably. So yeah, they make it seem like everything is so amazing, but yeah, let's see what he says when he comes on. So Powell is going to be on in 25 minutes, guys, and then we will watch him yap. Alrighty, so we're just waiting for now. So the markets look like they're probably going to sell up to the lows again, huh? Right. So I feel like the that little comment in there that said we expect slower growth in 2025, and I feel like that was a blow. That was a bit of a jab at Trump. No chance of central bank move this week. Indicating they want to no cut this year. Wow, look at that. That's a big number, isn't it? How many people do they have at the Fed? Seven. Okay, 7 of the 19. Wow, 7 of the 19 indicated that they wanted no cuts this year, and that's up from 4 in March. Wow, crazy, huh? Who are these 7 people that don't want rate cuts? They're like no rate cuts in 2020, 2025. The fact that you can even vote on something like that is ridiculous, isn't it? Like, you keep saying you're looking for data, right? Data to change your mind as we go on, and then you've already made your mind for the entire year, right? How can you do that? Anyways, they know more than we do, though, so we're just here. We are just here. Uh, GDP decrease, increase in the same amount of personal consumption, blah blah blah. Yeah. The economy grew at a solid pace. Yet, let's keep the rates high. With low unemployment and somewhat elevated inflation, uh, I just want to see where it talks about tariffs. Yeah. Cooked. We are cooked. I'm kidding. Uh, yep, yep, yep. That's the other side of the puzzle, Alan, right? That's the other side of the puzzle. I just don't think you can make a decision like that for the entire year, though, because you could have trade deals, you could have tariff deals, you could have the war in Ukraine end, you could have the war in Iran end, right? So making a decision like that for the entire year is a bit silly, right? There's definitely two sides, and we've talked about the other side, right? The Fed doesn't want to cut rates because there's chaos happening, and they're not quite sure how it's going to affect everything, right? And we said this the other day, like if we didn't have tariffs, like they would have cut rates already, guaranteed. Yeah, yeah, exactly. Oh, no, 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 no. Has some of his fiery trading rhetoric in a 90-day negotiation period. La, 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 la. Yeah. So I bet you, this. I bet you it has a lot to do with this, right? Is why they haven't cut those rates. No, 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 no. That yeah. So the Fed officials have been reluctant to move, fearful that tariffs Trump implemented this year could cause inflation in the coming months. Right. This is why. Right. That's the reason. That's going to be the reason. The whole time they're going to blame tariffs. If they wait for exactly, Gary, exactly. This is going to be their excuse, right? We don't know what's going to happen with the tariffs. We don't know what's going to happen with the war, right? Mostly the tariffs. So, but again, they've agreed to cut rates by 50 basis points at some point this year. Who knows when? Who knows when? So the price of blah 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 blah, and here comes the conflict, right? So the conflict between Israel and Iran adds another wild card to the policy mix. Energy prices additional factor in keeping the Fed from cutting. Yup, yup. All of the chaos basically is what they're using. The statement did not mention influence from the Middle East. But of course it's a part of it. Yeah. Other than that, there's nothing else. Yeah. There's nothing else. Well, I mean, he's done next year though, so he doesn't need to get fired. But the markets definitely don't like something, even though we're green for the day, right? Something in there that we don't like. So we'll see. Again, Powell is on in 20 minutes. Yeah, exactly, Archer. So we shall see what he says and how he answers the questions, and what the market thinks of all of this. So I go from there. Someone called him Dr. Eva Powell. I think if we break below the if we break below that 98, we're definitely going to be slapped for the rest of the day. You know what I like though that the market's done recently is the fact that we're selling off and coming back, right? Like nothing has been able to kill the S&P, right? We keep coming back to that 600. Maybe it's going to be a bull trap, but for now we keep selling off and coming back. Yeah, 97.20. Okay. So we keep selling off and coming back. I almost feel like when he starts yapping, we're going to rally back to 600. And yeah. What do you guys think in the chat? We sell off or we pump? Virus? Okay. What do you guys think happens though? Dipskis or boomskis? When Mr. Good Afternoon shows up. Sell off? You think so, Raven? Okay. So we read that already. So 7 of the 19 said no rate cuts this year versus 4 in March. 2 forecast 1 rate cut versus 4 in March. Wow. 8 C2 rate cuts versus 9 in March. 2 C3 rate cuts versus 2 in March. Interesting. I wonder if the political, you know, I wonder if that plays a role in all of this. I wonder. Because we can sit here and speculate. And I think I kind of feel like it does. But do they actually just look at data and make decisions? Or, yeah, I wonder. I wonder. Back to the trenches. Yep. The only person who decides our destiny is the person that's hiding in the shadows. Husa. Oh, virus. Steady dip and maybe a little bit of a recovery at the end if nobody stupid in the interim. Yeah. Invades every aspect of the government. Yeah. Yup. Yep. Would be interesting to know though, like if the reason why Powell hasn't cut rates is because of, can someone find out who Powell votes for? Or, like 100 years ago when he was born, Like can somebody do some digging and find out who he's voted for, or if he's been vocal about like who he would liked, right? Anybody know that information? Ah, virus. I sent you reports in DM. Mm-hmm. Sure. Who do you think? I have no opinions, Archer. I'm neutral. I am neutral. I just want to see SPY get back above 600, which I think we're going to do so. Because that's kind of the behavior it's had before, Straight scamming. Scamming behavior. Anyways. But yeah, so if you're just joining us, the Fed has left rates unchanged already. So, and yeah. No, but again, this was expected, right? So they do see two more rate cuts this year, though. 50 basis points is what they're saying. right? Do we believe them? I mean, they can change their mind at any point because this means absolutely nothing, right? So rates unchanged, potential two cuts this year, and then 25 basis point cut in 2026 and then 2025. But to me, all of that is just a bit, it's just, yeah, all of that is not important. Circle, on the other hand, is cooking with Coinbase for, okay, yeah. What I find really interesting still is how 7 of the people there said no rate cuts in 2025. Kind of feel like, that has to do with politics more than it has to do with, because the Fed really shouldn't be making decisions like that this far out. How many months do we have left? Like 6 months? Anyways, right? So how can we say we rely on data and then we were like, nah, it's fine. We don't need data. Again, some of that could be based on the fact that the virus. Some of that could be based on the fact that they expect, inflation to move up, right? Some, inflation to move up based on like the tariffs. Yeah, exactly, Alan. So not deciding, projecting. Yeah, that's what I'm saying, right? So, but still, I don't think the Fed should be making decisions like that, Alan. I think you make the decision with the information you have now, and then you adapt later. Potatoes, Shima, we're back. Yeah. Okay, moving on. So we have, it's hot. What's the temperature outside? So 13 minutes left. And then the dude is gonna be on. He's gonna be on yapping. Is anybody holding zero DTE calls or puts? Anybody holding anything SPY related? My goodness, Circle is a gem. Wow. I think it's going for all-time highs again, isn't it? I'm surprised coin hasn't broken above 300 yet. I have some oceanfront in Chicago. Yeah, exactly. 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 We're slowly getting back to 600 though, which is kind of what what we expect. At least what we hope for. You're holding spikes, okay. You're holding some puts. Rich is holding puts, and then Spikes is holding. What are you holding, Spikes? Calls. So zero DTE calls, MU, Nvidia, and Palantir puts. Okay, puts. So both of you are holding puts. Virus is holding calls. I'm hoping we pump, but then again, this might just be a run until he starts talking, and then we erase the whole thing and go to the abyss, right? But I'm hoping he sounds a little bit, dovish, bit bullish, just a little bit, enough for the markets to get back above to the highs of the day. You cashed out the puts, yeah, yeah, 50-50 spikes. Who knows? It only takes one wrong question. Let's go, Kel. That was a really good shout. That was really good. Monday after your vacation, okay. Have a wonderful vacation, Kel. Where are you going to? Enjoy. We'll see you later. 11 minutes, guys, and then he's on, and he's gonna say my colleagues and I, and then the market's gonna go crazy. My colleagues and I remain steadfast in our mandate to tell you to suck it. Uh, there we go. And we're back to the abyss again. Spikes, you see what you've done? Yep, that's what it sounds like. Uh, there we go. Keep going down. For now, you have 9 minutes, Spikes. 9 minutes. I really do not think he is political, but I think he's cautious. He didn't lower rates aggressively for Biden. Yeah. No, I think he's definitely consistent with like being late. He doesn't seem to be like a political guy, right? But we never know what he's like, when the doors are closed, right? Yeah, he doesn't really engage in the politics, but we know. we know. We know. When you close the doors and he takes that purple tie off, the purple tie comes off and he takes the shirt off and he's on the floor thrusting, we know. Yeah. Hey yo, Josh. I for a second to say hello. Circle is thrusting. Circle has been a beast, along with Coinbase and Coney. It was going to be a banger. Yeah, Circle has been a gem. How you enjoying the vacation, Josh? Uh, uh, there we go. Coin is pushing for the highs of the day, and SPY is still sitting at the bottom of the range here. Ah, we're just waiting for him to come on, guys. So Powell is on in 7 minutes. 9 minutes. Bull is moving today too, Chester. Yeah, it's moving for the same reason that Coin and Circle are moving. So the stable coin bill there. Stable coins. Let me take a look actually. Don't think I've looked at Bull yet today, but that's a nice pop, isn't it? Yeah, that's a really nice pop. Beautiful. Yeah, that $10 level has been an amazing support area, hasn't it? Yeah, if you bought the dip skis for Bull at 10, not bad. Not bad at all. I mean, it's only up 5% compared to, Coinbase at 14 and Circle a lot higher, but yeah, you hate Bull? Yeah, I know. Yeah, 9 is looking good too. 9 looks like it's breaking out, right? There's been a lot of talk about 9 today. 9 is at $1.14 now. Dang it, Raven. Why didn't we just wait and then till the end of the day? Why didn't we wait till the end of the day? Why, Raven? $1.15. Those calls would have been in the money now. Yeah. No, 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 no. Yeah, that's a nice break out there. Really nice break. I think that break above $1 was the signal for the push. Super slow though, nothing super crazy, but still. Yeah, nice run. Powell is on in 5 minutes, guys, and then we're gonna switch over and listen to him yap. Alrighty. So in the meantime, don't forget to smash a like, guys. I would really, really appreciate that. Take a second, smash a like for the second time today. Alrighty. Smash a like. Hit it. Hit it. 3, 2, 1. Everybody, smash a like. Hit that subscribe if you're new to the channel. Alrighty. And if you're not a member yet and you want to join us in Discord, click the link at the bottom of the chat there from Nightbot and sign up for the legend level. Alrighty. Yeah. So I mentioned earlier that I'm just gonna do some one-on-ones tomorrow, probably all day tomorrow. So if you're not a GOAT member and you want to upgrade to GOAT, upgrade to the GOAT level. Alrighty. After today, when we're done tomorrow and over the weekend, please don't sign up for the GOAT level because it's probably going to be closed for a long, long time, which is fine. Alrighty. Yeah, no, that's why I'm going to do one-on-ones tomorrow because the market's closed. Dan is going to be sending me pictures from the water park. Virus is going to send me pictures from the woods. And then I'm just going to ignore them, Ignore them like I don't see them. SPY is still sitting at 599.50 here. So mostly in the middle of the, yeah. Let me pull up the Fed website here. So obviously he's not on yet. From the dentist, had to schedule it for a non-market day. Yeah. Yep. That's how we get stuff done, You sold in the 70s. Oh yeah, that run, right? Yeah, that was nice. That was a really nice run, DP. That was fun. 11 to $70. I'm really hoping we pump. Come on, Powell, do us this one favor, please. For once in your life. I'm kidding, by the way. Yeah. Pump the markets. Tell Archer to go to bed. 2 minutes. Spikes wants that thing to flush. Yep. I say we pump just because the market's shown that resilience lately. So history of pumps, regardless of what's happening, we've had the Ukraine and Russia stuff, and yet we're still around 600. We've had no rate cuts, we're still at 600. We've had what else have we had? I know there was something else that was major, right? Speaking of which, look at where we're at now, 599. I should probably stop talking, before they crash it. Yeah. Before they crash the markets. The room is still not highlighted yet, so he's not on yet. And I'm not delayed, so still just waiting here. So we're gonna leave the let me share the other dang it does this every time. Okay. This is them and this is they. Right, so it's just the music in the background for now. Just the music in the background. Damn, look at Circle, guys. Circle is at 187 now. That thing is really going for 200. Wow. Here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I'll have more to say about monetary policy after briefly reviewing economic developments. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP as we call them, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment over recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.4% this year and 1.6% next year, somewhat slower than projected in March. In the labor market, conditions have remained solid. Payroll job gains averaged 135,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.5% at the end of this year and next, a bit higher than projected in March. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.3% over the 12 months ending in May, and that excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 3%, somewhat higher than projected in March. The median inflation projection falls to 2.4% in 2026 and 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%, and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to trade, immigration, fiscal, and regulatory policies continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year, the same as projected in March. The median projection declines to 3.6% at the end of next year and to 3.4% at the end of 2027, a little higher than the March projection. These individual forecasts are always subject to uncertainty, and as I've noted, uncertainty is unusually elevated. And of course, these projections are not a committee plan or decision. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on issues related to assessing the risks and uncertainties that are relevant for monetary policy and the potential implications for policy strategy and communications. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference that we held last month. We are open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up any modifications to our statement on longer run goals and monetary policy strategy by late summer. After that, we will consider enhancements to our suite of communications tools, including the SEP. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Colby. Thank you. Colby Smith with the New York Times. To what extent has the more limited impact from tariffs at this stage on inflation changed your view on what the ultimate economic fallout will be from these policies and the timing of when they will materialize in the data?
So we've had 3 months of favorable inflation readings since the high readings of January and February, and that's, of course, highly welcome news. Part of that just is that services, core services, both housing services and non-housing services, have really been grinding down toward levels that are consistent with 2% inflation. So that's the good news. We've had goods inflation just moving up a bit, and of course we expect, as you point out, we do expect to see more of that over the course of the summer. It takes some time for tariffs to work their way through the chain of distribution to the end consumer. A good example of that would be goods being sold at retailers today may have been imported several months ago before tariffs were imposed. So we're beginning to see some effects, and we do expect to see more of them over coming months. We do also see price increases in some of the relevant categories like personal computers and audiovisual equipment and things like that that are attributable to tariff increases. In addition, we look at surveys of businesses, and there are many of those, and you do see a range of things, but many companies do expect to put all or or some or all of the effect of tariffs through to the next person in the chain, and ultimately to the consumer. Today, the amount of the amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are as we learn more. And we think our policy stance is in a good place where we're well positioned to react to incoming developments.
So in terms of how we should interpret the rate cuts penciled into the SEP, is this reflecting that there's this expectation that underlying inflation will just stay well enough contained that allows the committee to eventually move ahead with those cuts? Or is it about, responding to a deterioration in economic activity, let's say? I mean, how should we make sense of the forecast?
So if you look at the forecast, you will see that people do generally expect inflation to move up and then to come back down. But we can't just assume that. Of course, we don't know that. And, our job is to make sure, one of our jobs is to make sure that a one-time increase in inflation doesn't turn into an inflation problem. And that, again, that will depend on the size of the effects, how long it takes for them to come in, and ultimately on keeping inflation expectations anchored.
Hi, and thanks, Chair. Howard Schneider with Reuters. If you look at the rate path starting in December to today and adjusted over the full time horizon you've got there, you've taken about a quarter point per year out of your projected path, and you end at a higher rate at end 2027 than you would have in the prior forecast. Is that a result of a sense that tariffs will lead to more persistent inflation? Is it a result of reassessments of where your short-term neutral rate is? Why are you on a slower path now?
So I would focus most on the nearer term as you get out to the later years. It's hard for anybody to know where the economy is going. You didn't see people moving their longer term, estimate of the neutral rate, for example, at this meeting. So and those things are probably slow moving. So I think if you look at what's happening here since March, this is since March, right? You see a little slower growth, just a tiny tick up, a 1/10 tick up in unemployment, and you see inflation moving up 0.3. And by the way, it was a similar move from the December SEP to the March. So that's what you see. You see the effects of tariffs. I think we learned in April after the March meeting that substantially higher tariffs were likely, and then since then, the estimates of where the tariffs will be have actually moved back down, although still at an elevated level. So we're adapting in real time, and what you see is an accumulation of individual assessments.
But you say in the statement that risks have diminished on that front, but the July 9th, drop dead date for all the Liberation Day tariffs is still out there and unresolved. You've got now exchange of missiles between two Middle East adversaries with a possible U.S. involvement. How can you justify saying that risks have diminished?
So what we said was that uncertainty uncertainty about the economic outlook has diminished but remains elevated. Many surveys say that they do. So and that's actually a line from the Teal book, which you can see in 5 years. Remember to check that.
Maybe the world will be over.
No, but if you think about it, tariff uncertainty really peaked in April, and since then has come down. And that's really what that's just acknowledging. It's diminished, but still elevated. That it's uncertainty. So I think that's an accurate statement.
Thank you. Chris Rugaber at Associated Press. There is an argument out there in favor of cutting rates more immediately. Inflation has continued to cool and is back at roughly 2% despite the tariffs. And I guess I also wanted to ask about, cracks in the job market with gross hiring slowing, concentrated in just a few industries. We've seen some housing data, including this morning, that have been pretty weak. Do you see any concerns that the economy is weakening and that is a reason to cut rates going forward?
So we do of course monitor all those things. I think if you look at the overall picture, what you're seeing is 4.2% unemployment and an economy that's growing at a rate hard to know given the unusual flows in the first quarter, but it appears to be 1.5–2%, maybe a little better than that. Sentiment has come up off of its very low levels. It's still depressed. So, you can point to things. The housing market is a longer run problem and also a short run problem. I don't think it's indicative of, basically the situation is we have a longer run shortage of housing, and we also have high rates right now. I think the best thing we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market. And that's the best thing we can do for the housing market. You asked about the job market. Again, look at labor force participation, look at wages, look at job creation. They're all at healthy levels now. I would say you can see perhaps a very, very slow continued cooling, but nothing that's troubling at this time. But we watch it very, very carefully. So overall, again, the current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments, and for now, and we'll be watching the data carefully.
Well, just quickly on, given that there are concerns inflation will rise, but there is the alternate scenario that tariffs would create demand destruction and slow growth sufficiently, and that would perhaps keep a bit of a lid on inflation. Do you see odds of that scenario? What kind of odds do you see of that scenario coming true, and how many months of cool inflation would you need to see before concluding that maybe that lower inflation scenario is taking place?
So this is very much the conversation we had today and yesterday. There are many, many different scenarios, many combinations of scenarios where inflation does or doesn't prove out to be at the levels we think, and where the labor market does or doesn't soften. And I think what you see people doing is looking ahead at a time of very high uncertainty and writing down what they think the most likely case is. No one holds these rate paths with a great deal of conviction, and everyone would agree that they're all going to be data dependent, and that you can make a case for any of the rate paths, I think, that you see in the SEP. And we do this once a quarter. It's a hard thing to do particularly at this time, but it does reflect. If you see somebody writing down a rate path that involves cuts, that's them saying, yes, I think we will get to a place, more likely than not, where cuts will be appropriate. And it could be a joint probability of a number of possible outcomes. Again, remember how much uncertainty we face, though.
Thank you. Mr. Chair, I wonder if you could describe for us some of those scenarios. How do you get to a place? I'm noticing that the uncertainty levels in your forecast are very high. How do you get to a place where you have the confidence in the outlook for, say, inflation and or growth or the unemployment rate? How many months does it take, and what do you want to see in the data to get to that level of confidence to actually reduce rates off the restrictive level?
So it's very, very hard to say when that will happen. We know that the time will come. It could come quickly. It could not come quickly. As long as the economy is solid, though, as long as we're seeing the kind of labor market that we have and reasonably decent growth and inflation moving down, we feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see to the extent to which they do over coming months. And I think that's going to inform our thinking, for one thing. In addition, we'll see how the labor market progresses. So at some point, it will become clear. I can't tell you exactly when that will be. And meanwhile, we'll be watching the labor market very carefully for signs of weakness and strength, and tariffs for signs of what's going to happen there. And of course, there are many developments ahead. Even in the near term, developments are expected on tariffs. So I think we don't yet know with any confidence where they will settle out. We have an estimate, and I think all estimates are now pretty close together, but it's again highly uncertain.
When you say estimate of the impact of tariffs on the core PCE, is that what it is? And could you share that?
What you start with is what's the effective tariff rate overall, and people are managing to that. But the pass through of tariffs to consumer price inflation is a whole process that's very uncertain. As you know, there are many parties in that chain. There's the manufacturer, the exporter, the importer, the retailer, and the consumer. And each one of those is going to be trying not to be the one to pay for the tariff, but together they will all pay for it together, or maybe one party will pay it all. But that process is very hard to predict, and we haven't been through a situation like this. And I think we have to be humble about ability to forecast it. So that's why we need to see some actual data to make better decisions. We'd like to get some more data. And again, in the meantime, we can do that because the economy remains in solid condition.
Nick Tamarosa of the Wall Street Journal. Chair Powell, I guess I'm wondering if you could explain a little bit more the divergence we see in the dot plot, particularly around the 2025 rate projections. I realize this is, you have one group of officials that are putting down no cuts, another that are putting down more than one. And again, recognizing that could be difficult to summarize, but is it a matter of people having a different outlook or a different reaction function, a different commitment to defending against another inflation mistake? How did that play out over the last 2 days?
So you're right. This is often the case. We have a pretty healthy diversity of views on the committee. We did have strong support for today's decision and broad agreement that our policy stance does leave us in a good place. But I would point to two factors, and you mentioned them. The first is just that parties have a diversity of forecasts, and they do align with where their dots are. So if you have a higher inflation forecast, you're going to be less likely to be writing down, more cuts. But remember, as we see more data, we're going to learn more about where inflation is headed, and that means when it is time to look at resuming our normalization process, the differences you see should be smaller because we'll have seen actual data. Right now, it's just a forecast in a very foggy time. So that's the first part, is forecast. Secondly, people can look at the same data and they can evaluate the risks differently, as you know. And that includes, the risk of higher inflation, the risk that it'll be more persistent, the risk that the labor market will weaken. People are going to have different assessments of that risk. So that you put that in there too. So those are the two ways that the two things I think that drive these things. Remember though, as I mentioned earlier, with uncertainty as elevated as it is, no one holds these rate paths with a lot of conviction. So that's really where it is. It's a function of those things. And I think as the data come in, you should see those differences diminish.
If I could follow up, you've said the policy is in a good place and that it's modestly restrictive. Given all the uncertainty you just talked about, tariff levels, uncertainty around the pass-through, is it price increases versus margin compression, some of the softness that Chris talked about in labor and housing, why wouldn't it be better to have rates at a more neutral setting as the economy heads into this period of very high uncertainty?
So if you just look backward at the data, that's what you would say, but that's not, we have to be forward-looking. And the thing that every forecaster, every outside forecaster, and the Fed is saying is that we expect a meaningful amount of inflation to arrive in coming months. And we have to take that into account. So I think a backward-looking look would lead you to a neutral stance, but we can't, we have to look at that. And because the economy is still solid, we can take the time to actually see what's going to happen. There's a range of possibilities on how large the inflation effects and the other effects are going to be. So we'll make smarter and better decisions if we just wait a couple of months or however long it takes to get a sense of really what is going to be the pass-through of inflation and what's going to be the effects on spending and on hiring and all those things.
Mr. McKee.
Michael McKee from Bloomberg Radio and Television. Your friend down at 1600 Pennsylvania Avenue continues to lob insults in your direction. And I'm wondering, given now that the Supreme Court has maybe carved out the Fed from some of the legal implications of that, whether this is just noise that the markets and everybody should ignore until your term is up, or whether you worry that it could lead to more pressure on confidence on Wall Street, on consumers about the outlook for the economy.
Look, from my standpoint, it's not complicated. What everyone on the FOMC wants is a good, solid American economy with strong labor market and price stability. That's what we want. We think our policy is well positioned right now to deliver that and to be able to respond in a timely way as the data lead us around. The economy's been resilient, and part of that is our stance. And again, we think we're in a good place on that to respond to significant economic developments. That's what matters. That is what matters to us. Pretty much that's all that matters to us.
I need to ask, assuming you are not reappointed, would you stay on as governor when your term as chair ends?
I'm not thinking about that. I'm thinking about this.
Andrew.
Thanks, Mr. Chairman. I guess with workplace raids increasing, picking up significantly, what kind of effect would that have on the labor market in
Sorry,
the short term?
what picking up?
Workplace raids.
So you're asking immigration?
Yeah.
You know, I wouldn't want to speculate. One way to get at that from an economic standpoint, we of course don't comment on immigration policy. It's not ours to make or comment on. But what you see is an unemployment rate that has been really solid and at a low level, not really increasing. It's been in a good range and well within the range of mainstream estimates of maximum employment. And that means, like, part of that is that labor demand and labor supply are kind of moving down at the same rate. Labor demand is softening. You see that in job creation, but it's still kind of at a healthy level. And labor supply is diminishing because the immigration numbers that we see are much lower than they were. So those two factors, supply and demand, that's what has kept the unemployment rate in a reasonably stable place.
Okay, thanks. The other thing I wanted to follow up on is if you could elaborate on the potential changes to the SEP that you suggested were part of the framework review, I think.
So the framework review really has two tracks, right? The first track is our policy framework that is reflected in the consensus statement. And we've said that we would finish that and announce it by the end of the summer. So we're well along in that process. We've had the meetings that we need to have, and we're now going to be going into, into discussions about, specific changes to language. So that's the framework part of it. The second part of it is our communications tools and practices. And that part comes next. Okay, that's what we're going to do in the meetings this fall. Actually, what we did at this meeting, though, is we sort of prepared the ground for that. We had a meeting where we talked at a high level about a number of ideas. The SEP is part of it. Many other ideas. It's sort of, how do we think our communications can be improved? There are a number of ideas. People offered a really, it was a great conversation, number of ideas, but we're going to look at those with staff briefing and a lot of thought in the fall. And I would say when it comes to changing communications, I would only support things really only implement things that have very broad support. And also you want to be really careful because I think our communications are pretty well received. They're not broken. So more is not necessarily better, but better is better. So we're going to be looking at ways to do things that will improve the clarity of what we do for the benefit of the public.
Thanks, Chair Powell. Kelly O'Grady, CBS News. You're famously known as the guy that makes decision based on data instead of speculation. You've said today the inflation data is in a good place. We don't know how tariffs are going to impact prices going forward. That's uncertain. But I've got to go back to the last time that you cut rates in December, and there was still the what if of tariffs. So what made you feel comfortable cutting then when inflation was higher than where it is today and you didn't cut today?
Well, the forecast for inflation in December was 2.5%. Core PCE for 2025, the forecast was 2.5%, which was a good inflation forecast. I think what we've learned is that, and this was long before we had any idea of what the actual policies would be, we've learned that the tariffs are going to be substantially larger than forecasters generally thought. And we don't, our forecasts are generally not particularly different from those of other, well-resourced forecasting operations. So what we learned, and particularly in April, was that very substantially larger tariffs were coming and that would mean higher inflation. That's what happened. And so you saw 2.5% forecast in December, you saw 2.8% in March, and you see 3.1% now. So it's 0.6 higher inflation for 2025. And that's a big part of the change. And that's due to the effects of the tariffs that are, we don't know where they're going to land, but it's pretty apparent they're going to land higher than outside forecasters were really guessing at the end of last year.
My follow-up to that, I think consumers, right, we're looking for relief on rates when it comes to mortgages, car loans, small businesses want to take out more manageable loans. When you look at the cumulative inflation over the past 5 years, prices have risen over 20%. It's been a rough road. So what is the tipping point then for the wait and see approach in terms of how much it's going to help versus when it hurts the American consumer?
Well, I mean, we're trying to restore price. Best thing we can do for the public that we serve is restore price stability. If we can, and we will, restore price stability, meaning 2% inflation on a durable, sustainable basis. That, and also maximum employment. If we restore those things, that's the best thing, and that is our goal. The best thing we can do for the American people, for households and businesses, that is the ultimate thing that we can deliver. And they can make their decisions without having to think about inflation all the time. So in the meantime, we have to keep rates high to get inflation all the way down. They're not very high, let's be honest. I would say policy is modestly or moderately, probably modestly now restrictive. If you look at the economy, it's not performing as though it were performing under very strict monetary policy, very restrictive monetary policy. So I would say probably modestly restrictive. And so what it will take is confidence that inflation is coming down. Now, I would say without tariffs, that confidence would be building, because if you see what's happening with non-housing services and housing services, which are the other two big pieces other than goods, those are coming down really nicely now. So I think we have to learn a little more about tariffs. I don't know what the right way for us to react will be. I think it's hard to know with any confidence how we should react until we see really the size of the effects, and then we can start to make a better judgment. So that's what we're doing, and I think we can take the time to do that because unemployment is 4.2%. Wages are moving up. Real wages are moving up at a healthy clip now. And inflation is 2.3% headline inflation over a 12-month basis. So it's a good economy and a solid economy with decent growth.
Thank you, Chair Powell. So you're saying that uncertainty has come down, the economy is moving at a solid pace, inflation has come down over the past 3 months, and this is all moving in the right direction. So are you indicating here that Americans should expect some sort of economic pain in the second half of the year?
I'm not saying that at all. From our standpoint, what I can say is that the U.S. economy is in solid shape. Inflation has come down. The unemployment rate remains at 4.2%. As I mentioned, real wages are moving up. It's a good job creation is at a healthy level. Unemployment, again, as I said, low. Labor force participation in a good place. So, and what we're waiting for to reduce rates is to understand what will happen with really the tariff inflation. And there's a lot of uncertainty about that. Every forecaster you can name who is a professional, forecaster with adequate resources and forecasts for a living is forecasting a pretty significant. Everyone that I know is forecasting a meaningful increase in inflation in coming months from tariffs, because someone has to pay for the tariffs, and it will be someone in that chain that I mentioned between the manufacturer, the exporter, the importer, the retailer, ultimately somebody putting it into a good of some kind, or just the consumer buying it. And all through that chain, people will be trying not to be the ones who pick up the cost, but ultimately the cost of the tariff has to be paid, and some of it will fall on the end consumer. We know that because that's what businesses say. That's what the data say from past. So we know that's coming, and we just want to see a little bit of that before we make judgments prematurely.
And follow up on that. So you spent years though talking about how you're data dependent, and be a little more direct on this. Now you're making decisions looking forward. Doesn't the data you're seeing today indicate there should be a rate cut?
No, I mean, your monetary policy has to be forward-looking. That is elementary. You've got to be looking. I always talk about the incoming data, the evolving outlook, and the balance of risks. We say that over and over and over again, right? So it's always forward-looking. At the very beginning of the pandemic, we cut rates to zero immediately. Nothing had happened. We just knew that it was going to be really bad, right? So we took very aggressive forward-looking, because we knew things were going to be unusually difficult. So of course, this is something we sort of know is coming. We just don't know the size of it. And again, the economy seems to be in solid shape. So the labor market's not crying out for a rate cut. Businesses, in a bit of shock after April 2, but you see business sentiment, you talk to business people now, there's a very different feeling now that people are working their way through this and they understand how they're going to go. And it feels much more positive and constructive than it did 3 months ago, let's say. So again, we think that our current stance of monetary policy is in a good place.
Thank you. Amara Mokwe with Bloomberg. Chair Powell, in February, you told Congress that the Fed is, quote, overworked, maybe not overstaffed. Then in a memo to staff in May announcing a deferred resignation program at the Fed, you said you wanted to ensure that the Fed was, quote, right-sized. Those two statements appear to be at odds with one another. Could you explain what changed in the roughly 3 months between those statements that made you decide that staff levels at the Fed should decline?
I don't see them at all as intention. So I was asked, is the Fed overstaffed? And I said, no, and I sort of said as a pun, overworked, but not overstaffed. People do work extremely hard at the Fed, and I know they work hard at Bloomberg too. So, but we work hard. But I would say this, so we are careful stewards of public resources, and sometimes you need to show that. So there have been several times in our history, modern history, where the Fed has said, you know what, we're going to do a buyout. We're going to show the public, we're going to demonstrate that we are good stewards of public resources. So we thought, and I thought that this is a time when we can, we grow at about, our headcount has grown at about 1% a year. So over the course of a couple of years, we're doing a careful scrub of the board and all the reserve banks, and we're going to find 10% of employees who can do something else, where we can streamline our operations, and we think we can get there in a year or in a couple of years. We think we can do that, and we think this is without taking risk to carrying out our critical missions. So this is something you do very carefully, thoughtfully, and you do it again respecting that we have critical missions to carry out. I've had a lot of experience in my prior careers, with headcount reductions and things like that, and this is how you do it professionally. You do it carefully, thoughtfully, with a lot of planning, and you do it over a period of time. I think the Fed will be fine. I think no one will notice any decline in our ability to carry out our missions. And I think it's just us wanting to demonstrate to the public that we are actually good stewards of their resources. We're effectively wiping out 10 years of headcount growth with this. So, I mean, we wanted to show that, that we're good stewards.
How is progress on reducing headcount going so far? Are you on track to meet the goal?
We're just at the very beginning. As you know, we're doing a buyout program. We're gonna hit that goal. I think many organizations find that they can do this. You don't want to do it every year or anything, but you can do it at intervals, and you wind up not interfering with your ability to perform your jobs.
Chair Powell, Claire Jones from the Financial Times. As you're no doubt aware, the Senate Finance Committee has tabled its version of the reconciliation bill this week, and I was wondering if you could tell me a little bit about the tenor of the debate at the FOMC over the past few days on fiscal policy and the degree to which that influenced people's projections for 2026 and beyond. Thank you.
Yeah, so we don't sit around and debate or really discuss. We take fiscal policy as fully exogenous, and so we actually really didn't talk about the bill or the contents of it. It's still evolving. When it gets closer, remember also we have a very, very large economy, and the effects will be at the margin, I expect that they may already be in, but they will be in by the next meeting. We'll make an estimate, but it's not a major thing. It's nothing that we discuss. It may have been mentioned a couple of times, but as something that's coming in. But I think the outcome is, we don't know the outcome yet there, so hard to be real specific.
Neil.
Thanks, Chair Powell. Neil Irwin with Axios. There have been some cutbacks in economic statistics collection in the last few weeks, worries that long-running problems around funding and response rates may be getting worse. How much is this concern on your radar? How much confidence do you have that the gauges you're watching to assess the economy are reliable right now?
Two things. One, the data we get right now, we can do our jobs. I'm not concerned that we can't do our jobs. That's not the point. The point really is that we are starting to see, layoffs and important gatherers of data are saying that they're having to cut back on the size of their surveys. That's going to lead to more volatility in the surveys. I think we should take a step back and, from our standpoint, and I think the standpoint of businesses and governments and everyone, having really good data on the state of the economy at any given time is a huge public good. It helps, it not just doesn't help the Fed, it helps the government, it helps Congress, it helps the executive branch. More importantly, really, it helps businesses. They need to know what's going on in the economy. The United States has been a leader for many, many years in this whole project of measuring and understanding what's happening in our very large and dynamic economy. And I hate to see us cutting back on that, because it is a real benefit to the general public that people in all kinds of jobs have the best possible understanding of what's happening in the economy and hence what's likely to happen. It's very hard to measure what's going on in the U.S. economy. If you read, there was a book called, it's really remarkable how many things you need to understand to estimate U.S. GDP. Very, very difficult. And it's so important that we get it right. I just would say it's not a place I would want to keep investing in that, for the good of the general public.
Victoria. Hi, Victoria Guida with Politico. So you're conducting this monetary policy strategy framework review, but next year we're supposed to have a new Fed chair. And I'm wondering if that affects at all the way that you're approaching this. How do you ensure that this framework will actually be durable?
The framework document goes back to 2012, and it's the committee's document. It's not like we're going to invent a brand new way to do things. It's been an evolving document, so it shouldn't depend on who the chair is at all. It should depend on what's happening in the economy and what the committee wants to do. So, yeah, it isn't really tied to any particular chair. And we used to renew it every year. Now we do it every 5 years. So, but I don't think I've never heard anyone raise this issue that, a new chair might want to come in and go in a completely different direction. I really don't think that's right. But, that's not going to be up to me to decide.
Is that affecting at all who you're consulting with?
Not at all. Not in any way.
Thank you. Chair Powell, Matt Egan from CNN. Relatively low gas prices this year have helped drive down inflation in recent reports, but that trend is starting to reverse given the crisis in the Middle East. How are you thinking about how the Israel-Iran conflict will impact the economy, especially inflation? And what lessons were learned during the 2022 period when another conflict, the Russia-Ukraine war, sent oil and gas prices skyrocketing?
So, of course, we're watching, like everybody else is, what's going on. I really don't have any comment on that. Possible that we'll see higher energy prices. What's tended to happen is when there's turmoil in the Middle East, you may see a spike in energy prices, but tends to come down. Those things don't generally tend to have lasting effects on inflation, although, of course, in the 1970s, they famously did, because you had a series of very, very large shocks. But we haven't seen anything like that now. The U.S. economy is far less dependent on foreign oil than it was back in the 1970s. So, but there.
A quick follow-up. I've just got to ask you about artificial intelligence. Some technology executives have recently been warning that AI could wipe out a large chunk of entry-level jobs and significantly increase the unemployment rate. I'm wondering how concerned you are, if at all, about the threat that AI poses to employment.
So this is the question. Question really is, will AI be more augmenting labor or replacing labor? And we all see those announcements, including one today. I wouldn't, overread a couple of data points, because, AI should be creating jobs at the same time. It may be replacing, maybe doing both. Anyone who's done any work with AI will have been a little bit stunned at how capable it is. And it's just a different thing. So I think this is something that certainly has transformational potential. And probably we're in the very early stages of it. You know, they say what you're seeing now compared to what you'll see in 2 years is going to be very different and even more effective. So I think it's really hard to know. That, you know, of course, there are optimists who feel like it's going to make everybody much more productive. And there are those who think it's going to replace an awful lot of jobs right across the income spectrum, you know, white collar, blue collar, and everything. So I just don't know. We don't have a house view on that, but this is going to be a very important question for some time.
Greg.
Thank you. Greg Rapp from MarketWatch. I was wondering if you could step back a little bit, Chair Powell. You know, there's a spate of articles and a lot of op-eds now in the newspapers saying that the U.S. economy and the global economy is going through this profound change, you know, akin to the end of the Bretton Woods era in the 1970s. And don't you owe the American people like some sort of like explanation for what we're going through? I mean, I noticed earlier this month when you talked about Bretton Woods a little bit, and you said that Bretton Woods, the Fed staff had to like change how the dollar movements of the dollar was impacting the economy. Are we going through something like that now? That, you know, are you having to change how you do monetary policy? Is it that fundamental a change underway? Thanks.
It's certainly a time of real change. You know, from a geopolitical standpoint, from a trade standpoint, from an immigration standpoint, you see this not just here, but everywhere. So there's quite a lot going on. It doesn't change the way we do monetary policy in the near term. I mean, but and it doesn't change our objectives or what we need to do. And, you know, these things are not really our issues. They're really issues for elected governments. All of those issues are really for elected governments. But there's no question it's a time of real change, and very hard to see where that goes. You know, will it be, there have been many things written about how it's going to be a more inflationary time. That's possible. It's not guaranteed. You know, AI could cut in the very other direction. AI could make people much more productive and push in the other direction. I don't know though. So, but you're right. But honestly, our focus is a much more practical one. And that is, how do we keep inflation low and employment high in the near term? That's really what we're about.
Mark.
Hello, Chairman Powell. Mark Hamrick with Bankrate. What is the view about the growing amount of slack in the job market, including the softening in payrolls, the forecast of a modest rise in the unemployment rate, and the ability of workers to demand wage hikes or not in this environment where you have inflation surging?
You don't really see unemployment going up. You don't see increased slack, really. I mean, at the margin, remember, you're at 4.2% unemployment. That was, for many years, that was a extremely low level. It happens to have come up off of an even lower level as we came out of the pandemic. We were as low as 3.4%, but 4.2% is probably at the low end of estimates of the longer run, you know, sustainable level of natural rate of unemployment. So I guess I wouldn't agree with that. And also, in terms of wages, you know, real wages after inflation have been moving up sort of more than was consistent with 2% inflation. They're still moving up at a healthy clip, and I think much more consistent with 2% inflation given a reasonable assessment of trend productivity. So it's a pretty good labor market. You know, you're right that the level of job creation has come down, but so has the supply of workers, the change in the supply, the new supply. So you've seen the unemployment rate remain pretty stable at 4.2. It's been as high as 4.3, but you know, those are good numbers. So it's a pretty good labor market. There's a more concerning thing is there's not a lot of layoffs, but there are not a lot of job creation. The number, if you're out of work, it's hard to find a job, but very few people are being laid off at this point. So that's an equilibrium we watch very carefully, because if there were to be you know, significant layoffs and the job finding rate were to remain this low, you would have an increase in unemployment fairly quickly. But that hasn't happened. It really hasn't happened. the U.S. economy has defied all kinds of forecasts for it to weaken really over the last 3 years. And it's been remarkable to see just again and again when people think it's going to weaken. Now, eventually it will, but we don't see signs of that now.
Go to Jean for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. There's been a lot of talk about cuts. I wanted to ask you, why do you think there are no forecasts for rates to rise or even to stay where they are next year, given that the projection for inflation is to rise to 3%, and there's a lot of there's some skepticism over whether those price hikes will be a one-time event?
So there are a number of people on the committee who wrote down no cuts this year, but some cuts next year. So I think, people are writing down their most likely path, right? They're not saying there's zero possibility of other things. Really, it's think of it as the least unlikely path in a situation like this where uncertainty is very high. I think, again, people write down their rate paths, and they do not have like a really high conviction that this is exactly what's going to happen over the next 2 years. No one feels that way about their rate path. They feel like, what am I going to write down? I mean, what would you write down? It's not easy to do that with confidence. So I would just say it that way. We don't rule things in or out. Certainly a hike is not the base case at all. It's not something people are writing down. But in the meantime, we do the best we can with these forecasts, and I think they're representative of the different forecasts and different reaction functions that people on the committee have. So thank you very much. Thanks.
Thank you very much. Thanks. Thank you very much. Please, close that down. Did you guys learn anything? Anybody learn anything new? Bye-bye. Should you sell? Yes, Michelle. Yes, you should sell. I was too busy watching this one. BLNE. Woof. That thing cooked. Yeah, let's get back to 600, please. Get that dude out of here, please. Get him out of here. Let's get back to 600. Let me get some music going. Get him out after watching that douche. I think there's some merit for like not making decisions because there's a lot of uncertainty. So I get that side of it. Like the Fed isn't there to work for the government, right? So I mean that's the system they put in place. So yeah. If both parties were working together, you could see the the confusion, but yeah, they're obviously not working together. Yeah. So yeah, I mean, we wait for the next Fed meeting, right? The market sold off to brand new lows, and it looks like we're kind of recovering a little bit now. So let's see where we close. But yeah, no, I was more so interested in this name though, in BLNE, right? That thing had some unusual volume and a nice float, right? And some nice boom skis. So nice little breakout and a retest there at 85 cents, and then booms $1, 106, halted up. Thunderstorms tonight. Thunderstorms. Perfect. Okay. Give me an on hold. Give me an on hold. Forget about SPY. Forget about Powell. The markets will go back to the highs with or without him. The reason why there we go, 113 guys. Woof. That's a nice pump up. That's a nice pump. It's a very nice pop. Make sure you pay yourself on the way up if you got into that. This is definitely not a diamond hand play, right? Unless we consolidate around $1, there's a lot of supply up there. You can see the red zones, right? I still like it though. And here we go, brand new highs, 114. So I think for now we just need to close above that supply zone and consolidate above $1. Oh, Matt is gonna fight you guys. Fight. Violence in the chat. Yeah. I think the markets are kind of sitting where we were before the Fed meeting started, anyways. So the markets care until they don't, right? So I think if we can get rid of this whole chaos in the Middle East, right? You can see what the markets did, right? As soon as Trump tweeted or the message came out that Trump was meeting with Israel and Iran, the markets rallied back up, right? So if they can fix the chaos, the Fed issue will fix itself. So that's what they need to do. They need to fix the damn tariffs. They need to fix the war, blah blah blah, and the markets will do their thing. So I think the Fed is the least of their worries. Cutting rates is the least of their worries right now. They need to fix the other issues. Yeah, fix them. It looks like BLNE is halted down, so profit taking going on there. And there we go. So it depends which of these levels we hold going into the close, and then we can look at that as a potential swing. Yeah, Circle is a beast. Yeah, this thing definitely will hit $200 at some point, doesn't it? Unless people start dumping it below 200, but this has been an absolute beast. An absolute beast. Michelle, why did you say? I'm kidding. Yeah, can you imagine keeping those calls? Sheesh. At least you're holding shares though, so that's not an issue. Yeah, forget about SPY for now. After hours, yeah. Yeah. Well, Alex, because I sold them at the open. Tariffs and will cook. Bears just need one thing to pop. Well, you notice how though? You notice how like you have all of these things going for you as a bear, right? No rate cuts, war, multiple wars, like big wars, right? And yet SPY is green for the day. Well, we're probably going to end up being red for the day, but you notice how you have all of these things going for you, Archer? That's the way you need to look at this, right? You fix one of these issues and the market will slap you. Slap. If they make a deal, if Iran makes a deal right now as they're meeting, oof, you better pray that you don't have puts overnight because the markets will be halted. I'm kidding. But definitely back above 600. So for now, it looks like, we're probably going to end up in the abyss here. Right? There's nothing to drag the markets up, right? But if they can come up with something, then you have a problem. No, just one, Archer. I promise you that if there's a deal with one of these countries, the market cooks. If there's a rate cut, which obviously we know there isn't going to be, the market's cook. You just need one, just one. Yeah. I won't recommend. That's okay, Matt. That's okay. That's okay, right? You showed up for the technicals and for your political, your politics, yeah. So, yeah, you not recommending is a personal thing, right? It's not, yeah. Yeah, we've been chatting all day, and we've been talking about technicals. So if you're unsobbing because of your little fight about Powell, then that's a little bit silly, don't you think? Yeah. So to me, if that's your reason for unsubbing, then I don't really care, honestly. Right. Thank you for yeah, no, absolutely, Matt. Thank you. I appreciate you hanging out as well. And whenever you have a question, come hang for sure. Yeah, absolutely. Absolutely. Moving on. Let's see what happens with the on halt here for BLNE. Is now worth 36. Oh my goodness. Oh my goodness. You sold the damn call at $7. It's worth $36 now. Sheesh. Yeah, that's right. That makes a lot of sense. because that thing was at 140, 148 at the open. It was actually like it gapped up and then it sold off, and it's been running all day. So yeah, that makes a lot of sense. Yeah, absolutely, Matt. Good luck to you as well. Thank you, thank you. You had two. Damn. Oh, is it still a Green Day though, Michelle? Green Day or not Green Day? Um, see what others. But it works. Difficult to keep discipline, but it works. Love it. Yeah, we cook on the one-on-ones, guys. We cook on the one-on-ones. Yeah. No, Matt wasn't happy about the Powell fighting. What a rubbish price action. No, this was good though, right? The slow curling was good, and then the boom skis, you just had to get rid of it in the supply zone ST, right? We were posting this thing in Discord in the 80s, right? Low 80s, right? All the way to $1.14 there. So you just had to like get rid of it in the supply zone resistance, right? Not a big run, but you just had to get rid of it. Yeah. A few because yeah, exactly. Yeah, that's quite the dip there. Quite the dip ski. That thing actually dipped all the way to 70. Wow. Yeah. Again, that's why you use those stop losses. Take your money and runs. Take your monies and runs. Take your monies and runs. Yeah, let's see where the S&P closes today. You had a stop loss at 101. Beautiful, Adam, right? Yeah, because if you don't, like, look at where it's at now, 20 cents lower, right? Yeah, stop losses are so important, honestly, right? Because sometimes we just can't react, right? Like, this is too quick. So, like, use those stop losses. They're gonna help you out a little bit. $50 free cash. Let's go, Adam. Membership paid for, right? Love it. Well done. Membership paid. Yep. Love it. Yeah. Yeah, again, so I'm going to be doing some one-on-one sessions tomorrow, probably all day tomorrow already. So again, if you're not a GOAT member, upgrade to the GOAT level, because probably after today, we will not be accepting any more GOAT memberships already. Not for a little bit. When I say a little bit, it's probably gonna be a long time. Because yeah, already. So we'll do a whole bunch tomorrow, and then if we're not done, then we'll do that on Saturday as well, the weekend. Do that on the weekend. Cool. Yeah. IMRX, yeah, that one did really well, didn't it? Yeah, this has been really good, right? This has been really good. So if you're in this one, congratulations. Really, 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 really good. They had that news yesterday, right? So yeah, this has been, it's been super slow, right? Kel mentioned this one earlier. In the 230s, all the way down there, right? 250s, and it's been slowly cooking. Yep, crazy, huh? Slow and steady, Winterfell. Slow and steady. Sometimes that's all you need, you know? The slow and steady stocks. Potentially, yeah. Yep, it's trying to. It's holding up the 200 EMA for now, Adam. So, yeah. So anywhere from like 80 cents to 70 cents, that seems to be a good zone in between that. Right? So 80 to 70 cents, that seems to be a nice little level there. Yeah, it's holding that little white line you see. At 149, yo, $400, that's crazy. Yeah, that is crazy. Michelle, how close are you to 25 now? Green or red? I want to know. Oh. Yep, exactly. And this is what we this is why we say this every single day, right? You know, despite the news, it did awful. Exactly, right? There's price action, there's news. There's reaction, there's news. The reaction is better than the news, right? The reason why anybody reacts, anyways, that isn't gonna make any sense. So I'm just gonna leave it before Dan roasts me, you know? It's holding Kim, yeah. Really? Dang it. Okay. Yeah, green is still good though. I'm gonna leave it there, Adam, before I get roasted. um, right? But again, regardless of a stock having a press release, catalyst, whatever you want to call it, right? You need to pay attention to the price action. The way the stock is performing is better to you than anything else. Right? So if someone's yelling like, "Oh my goodness, this stock is going to the moon because of blah blah blah," and then you're looking at the stock and you're losing money, you know who you're playing? You're playing yourself. Alrighty. So this goes back to the AMC days, right? Like everybody was like AMC to 1,000, and then AMC would drop. AMC to 1,000,000, AMC kept going down. Oh, I'm down 20%, but it's gonna squeeze, right? No. Price action over anything. Yeah. 239, Jimmy. 250 was just la 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 la. Yeah, exactly. Yeah, that was a good shout, Kel. SSI, yeah, saw that one pop up on the scanner. Like, look at this. Look at Circle. Circle is gonna be at 200 before the market closes. Damn, this is impressive. Michelle, are you planning on selling, or you're just gonna keep it for now? You planning on selling, or you're just gonna keep it for now? Yeah, nice little alert there. It spies back to 598, so only $2 away from, you know. Yeah. IPO soon. Narrative? No. Not that it's been confirmed. Nothing of, yeah, not confirmed yet. I can't believe I saw that 100 the other day, Dustin. Dang it. Yeah, we said this a few times, right? As long as Circle stays above 100, it's fine, right? I don't think we knew though that this there would be a catalyst like this for stable coins, but the damn thing stayed above $100, almost like somebody knew this was coming, right? So, yep, yeah. Yeah, Michelle, good price action. The only reason you would sell this is because you're up quite nicely, right? But other than that, in terms of like price action, it looks really, really good. So there goes a 199, right? Yeah, Chris, welcome to Goat. Again, if you are a Goat member, guys, if you just signed up for the Goat membership, either leave me a message in the one-on-one channel or send me a DM so I know what I'm doing tomorrow. Alrighty, please. Please, please, please. And then time to make the move, Chris. Yeah, let's do it. Alrighty. So send me a DM in Discord. Leave me a note in the one-on-one channel. We'll do something tomorrow or Saturday. Alrighty. But mostly tomorrow though. Mostly tomorrow. Alrighty. So send me a DM. Otherwise, I will not message you and say, hey, you want to do a one-on-one? I won't do that. Not because I don't want to, just because I won't remember. Alrighty. And then if you message me next week, like, hey, then you're just gonna have to schedule something on the calendar. Alrighty. So please, 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 pretty please, with the cherry on top. Yeah. There we go. Yeah, no, for sure. And that's what I mean, right, Michelle? Like the price action is not showing you any indication of selling, right? The only reason you'd be selling this is because you're happy with the gains. It's had a big run. Like this is a pretty impressive run, right? I'm pretty sure we all know that this company isn't worth this much yet. It will be in the future, probably, right? And then also a lot of people are, planning on selling around 200. So, and we're getting to the end of the day, right? So you have a few reasons that would make you sell, right? Again, end of the day, pretty big run, right? Buy the hype, sell the news, right? But all of that is just speculation. Whereas you look at the actual data and the stock is performing well. So, yeah. Yeah. So yeah, in between that 80 and 70 cents, Adam, that seems to be like the spot. That seems to be the spot. Circle meme, right? Fundamentals don't support the valuation. Teach me. Are you actually asking a question narrative or you're trolling? Why do I feel like you're trolling? Yep. Why do I feel like you're trolling? So email confirmation. There we go. You left a message in Discord? Okay, I'll take a look. Where did you leave the message? Stock General? Oh, the one-on-one? Okay. Perfect. Okay, perfect. Okay, I'll send you a message tomorrow. Alrighty, and then we can chat. No, I mean, obviously we've been watching Circle for a long time now, since the IPO, right? And we like this IPO a lot, right? So we like Circle a lot. And we haven't really said anything negative about Circle, right? From a technical point of view, it's performed really well. From like just a company point of view, it's a company that's going to do really, really well, right? So no concerns at all. And if you've done your research and you're planning on holding a long term because it's going to be worth $500, because probably it will be someday, right? Not today though. Alrighty. And $200 will act as some nice resistance there. Coin going for 300. Yeah. Let's see. Okay. Perfect. Just trying. Yeah. I promise you the narrative. Yeah, no, absolutely. Right. I promise you Coinbase. Yeah, let me pull up Coin. If so, the shares of this company were sold at $31. I promise you, if these guys knew that they could sell shares for $200, if they thought that the company was worth over $100, $200 at the time of like the IPO, they would have sold those shares for $200. Promise. Right? So it's a company that's definitely going to be worth that amount of money, right? but this is being driven by that momentum for now. It's the vibes, right? So more than anything else. Not that it's not worth, not that it will not be worth this, but for now it's being driven by the vibes. So sometimes when it's moving like that, right, you don't want to completely focus on the fundamentals because the fundamentals will eventually come through. But for now, it's more so being, it's moving based on, right? So let me pull up coin. So that's why you want to be careful. Coin is on fire, 17% per coin. Damn, that is nice. That is very, very, very nice. There we go. How much? 15 minutes left? Yeah, 15 minutes to get to 300. 210% of those calls, Michelle? Yeah, well done. Well done. Well done. 299. $1 left. Just $1. My phone. I'm no. Okay. Perfect. Is it curling? Yeah, I honestly don't mind that thing if it can stay above that 200 or above 70, right? So in between that little 10-cent range there, I don't mind it at all. I don't mind it at all. It looks like 9 is pushing back to DP. Are you in the chat? Yeah, 9 is slowly pushing back up there again, isn't it? So maybe an after hour break. Maybe. Yeah. Yeah, you might get a bit of momentum after hours, Adam. A little bit. There we go. Okay, sounds good. Yeah, it needs to break out, maybe after hours. BLNE is pushing into that 70 range. Yeah. Adam, don't lose the that money's though. Yeah, exactly. So there will be no chicken because of the egg broke. Yeah, someone cracked the egg. I mean, the egg has been sitting at $6. It's actually been holding $6 quite nicely since the disaster here. So maybe $6 is the sweet spot for the egg. Adam, unbelievable. Yeah, 3D again. Come join us in Discord. You're gonna miss us after hours. You know that, right? Come join us. Come join us. Not gonna risk much else. Yeah, perfect. $200 a day is it's what a lot of people dream of, right? So it might not seem like a whole bunch, but it's very nice. Ready? $200 a day is very, very nice. Yeah, perfect. Oh, was that you 3D? Was that you popping it from $6? Oh my goodness. I'm gonna send another video here for you guys to watch. Watch this class. So perfect. Perfect. Thank you, LT. Again, I like the don't you guys like the thank you so much. I made $3,300 today going to have some steak for day off tomorrow. Love it. Love it. Love it. Enjoy the steak 3D. Congratulations. Alrighty. On slide today, dang it, narrative. Yeah, we were on here saying like we don't like slide, right? Slide was the least favorite IPO today, right? So slide just wasn't it for me, especially the way that it opened as well. So if you were watching the stream earlier, we would have definitely pushed you away from slide. Yeah, $3,000. Very nice. Yeah, so remember tomorrow is a holiday. Take some time and enjoy the day off. Ask questions in Discord, right? Blah 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 blah. Spend some time in the New Trader Education channel if you're new to the community. Please take some time and go through the channels, educate yourself, and yeah. Again, I wanted to say that I like the way that Stock General is, right? Because people seem to be having a hard time, right? I've had a few messages again, so try your best and keep it clean, right? If we want to have general conversations, we could just go to Hangout General, right? So a lot of people have been using the Hangout General, which is good. So yeah. So again, let's try and keep it. Obviously we can't clean it up to get all together because we still need to have fun and spam gifts every so often, right? But when we're ready to just go full off topic, then just go to Hangout General, please. Alrighty. Yeah, because some people really do trade at work, right? Some people really do try and some people really do some people do really do like a split screen on the phone at work, right? And then they're having a hard time, right? So try and keep it as clean as possible. Adam, absolutely. The market's one of those things, like once you do Adam, you're never going back. They want a new leadership there, Archer. Yeah. I mean, a lot of those people are dead though, so yeah. Perfect. I don't know, Azu. I don't know how he gets those videos. Yeah. It's very stressful. Yeah, Dustin trades at work, right? So, if we can try and keep the channels clean for people like that, right? It'd be nice. It'd be nice. Looks like we're going to close below 200 for Circle. And then let's see what happens after hours. A Nitro Shiba? Oh, yeah. Oh, your picture? It moves a little bit. Yeah. Trying to Vena, trying to get to trading from home like you all. Eventually, Vena, eventually. Don't worry. Don't worry. You're in the right place now, right? If you have any questions, ask in Stock General, and yeah, we will definitely help you. The top guy, guess he wants to live. He's hiding in a hole, Archer. That's why he let his people go fight while he's hiding in a hole. No. Yeah, that's a sweet scalp. That's a very sweet scalp. Yeah, for Circle from 76 to 198, basically. Yeah, that's a nice exit too. PLNE is still struggling there, isn't it? Interestingly, though. And 9 is having such a hard time breaking out. Such a hard time. Yeah. And then again, for some of the people that work, that trade from work, right? Every so often we're going to spam gifts, right? We just have to understand both sides. We're not going to completely clean it up, right? So we're human and we need to have fun, and it's easier to, right? So we're definitely not doing it as much as we used to, though. So it's a happy medium, right? In 6 months, Prasad, yeah, take your time and learn, right? Spend a lot of time in the New Trader Education channel, right? We have videos, we have books, we have, ask questions in Stock General. If you put in the effort, you will definitely be there in 6 months. Alrighty, so there are a lot of educational videos. Spend time, when day off, over the weekend, listen to some of the podcasts, when you're driving home from work, blah, stuff like that, right? It's really, really going to help you out. So it all depends on the amount of effort you put in. Alrighty, I'll rely with a nice pop there. Love it. Yeah, balance is key. Gives into stream, so yeah, is exactly, Shima. Balance is key. Have a great day off, Chester. Welcome back. See you in Discord. Yeah. Yep. And yeah, no, we're definitely all guilty of it, Shima, including me. I definitely spam gifts, when I shouldn't be spamming gifts, My beef is done. No, absolutely. Right, we all complain to improve, right? We don't complain to complain. We so yeah, absolutely. I'm planning to do that. I found you 2 days ago and like your picks and learned a lot. So I signed up. Off on vacation, June 24th to the no trades. Okay. So while you're on vacation, right? If you have a little bit of time, no trades, just take that time, and if you have an hour on vacation, watch one of the videos, right? Yeah. Political. Yeah. No, that stuff definitely doesn't need to be in Stock General, please. Yeah. So yeah, gifts will definitely be there every so often, right? Like when Shima is watching Spurs next season and Sun scores, I'm sure she's gonna spam a Sunny gif, right? That's okay. It's okay. We want it to be not just stocks, right? When people get away off subject or debate their political beliefs for extended times, there's a channel for that. Exactly. Yeah. Yeah, absolutely. Yeah, we need to keep the Israel stuff, and the Iran stuff. It's different when it's a headline, right? It's like, okay, there's a headline, this is happening, because then we might need to go watch some of the oil stocks, right? But when it's extended politics or why this shouldn't be happening, we don't care why it's happening, right? We just know that it's happening, and we need to know how to react to that. That's it. that's the extent of yeah. But again, we're gonna get off topic every so often, so and that's okay. Dang, Circle, wait, look at that. Circle almost closed at 200. It actually broke above 200. We weren't paying attention. Wow. The market is closed. Dustin, absolutely. Absolutely no. We'll try our best, right? We will try our best to organize some stuff. No, 8 p.m. Eastern time, Winterfell. Yeah. Since the 24, yeah. So 8 p.m. Eastern time. Yeah. I know, right, Adam? Right below 200. At least it hit 200 though. That's actually really nice. It's really, really nice. And then SPY closed in the abyss. Closed in the abyss. Let's see. Yeah, you sold at 186. That's okay though, Prasad. If you made money on this, honestly, look at that thing go. Yeah, Circle is wow. That thing is flying. Flying. New highs for Circle. Damn. $203. Quite nice. Again, don't forget to smash the like, guys. I know you're smashing the like for the second time. Let's get to 100 likes. If you haven't smashed the like yet, let's get to 100. There are way more people watching on Twitter than they are on YouTube's. Like the number is not even close. There's like three times more people watching on Twitter than on YouTube's, right? But yeah, still smash a like. 146 to 180 to 186. That's not a bad scalp percent, right? Good job. Not bad at all. This has been a really, really good stock. And honestly, I wouldn't be surprised to see it, keep pumping. So I would not be surprised to see it go. Go. But yeah, we're gonna hop off, guys, and continue spamming Discord and whatnot. Alrighty. If you do become a GOAT member, please don't do it after today. But if you do it today, just send me a DM in Discord or post a message in the one-on-one channel, and we'll do a one-on-one tomorrow. Alrighty, and then get that over with. Yeah. You sold at 95. Oh my days! You could have got back in above $100 though when it broke and held $100, right? Because it did a really good job holding it, right? So just because you sell a position doesn't mean you can't go back. If it's proving to you that it's doing a good job, right? You can always get back in. You can always get back in. That's okay, Verna. That's okay. There's gonna be another one and another one and another one. No crying, no tears. No tears. Yeah, 77 cents here for BLNE. So let's see if that volume comes in. For now, though, it's all about the circle. Small accounts, yeah. Yep. No, that's definitely frustrating. So when is the next circle on circle? When is the next entry on circle? No, that thing is gone now. That thing is gone. Enjoy your weekend, right? I mean, enjoy your one day off. They should have done the holiday on a Friday. I think next year it's on a Friday, so then it's a 3-day weekend, right? Yeah, DW, yeah. DWSN. Nice spam up the scanner there. I think it's coming from, yeah. Yeah, that's a nice pop actually. Yeah. 255. Still really early, so we'll see how the next few candles perform here. Crazy. Us chickens, always a pleasure. Enjoy the day off. Chickens, enjoy the day as well. Not a day off because I'm going to be doing one-on-ones all day tomorrow. And yeah, I'll bring lots of snacks, okay, guys, for the one-on-ones. Lots of snacks. You guys bring snacks too. But yeah, enjoy the day, guys. Have a good one, Adam. See you on Friday. See you in Discord. Right? We're going to be in Discord for after hours. Be safe, everybody. Much love. Be nice to one another, please. Alrighty, put the politics aside, put the everything aside, and remember that you're human first. I'm going to the water park. Dan is so excited. Dan is so excited that he's going to the water park, and I'm going to be working. Let's go. Oh, the Yenny? Yeah, he is so excited that I'm going to be working and he's going to be at the water park. Dustin, see you tomorrow. Unbelievable. I can see. I'm a big kid. I know. I mean, I would be excited too. Unbelievable. Much love, Dan. Enjoy. See you on Friday. CM, well done. Congratulations today, especially on Circle. See you in Discord. Hi, bye, Pavan. Alrighty, again, smash the like before you go. Hit that subscribe if you're new. And if you do want to join us in Discord, you can click the link at the bottom of the chat there from Nightbot and join us. Alrighty. We'll hop off. Virus, let's go. Much love. We will hop off and continue looking at these names in Discord. Alrighty. Raven, nine was annoying, wasn't it? Yeah, that's okay. Have a wonderful day off, Raven. I know it's not really a day off for you, but yeah. We're all big kids, and Michelle is our mom. Yeah. Yeah. Again? No, not for you, Raven. Much love, everybody. I'll catch you guys in Discord and on Friday. And for some of you guys, tomorrow. Alrighty? Bye, guys. Bye. Much love all. Bye.